And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. It's me, Tim Justice, the host of the show, with my cohorts and co-hosts Matt, Mark, and Cody on the back end doing the production. Matt, how you doing today?
Doing really good, Tim. Seeing something fascinating in the S&P 500 right now from an intraday perspective. I'm sure we're going to talk about it, but a historic day. We got the Senate passing their $2 trillion stimulus package. We're going to break that down. The House is going to probably meet on it tomorrow because they recessed for the day, and we'll see what Trump has to say about it with signing the bill.
Yeah, there's a lot to go on there with that stimulus package. That is the one making headlines. Let's start with that conversation real quick. Obviously, there's been a lot of back and forth between House Democrat or Senate Democrats
Hey,
and Senate
very quickly,
Republicans.
Tim.
Go ahead.
Just very quickly before we get into the discussion on what's in the bill, technically here you are seeing something that is fairly important in my opinion. You're coming up against a very significant resistance level in the market from an intraday perspective. If you look at this 2,500 level right there, you see it as an old resistance point multiple different times over the course of the last week and a half. You're now coming into that 2,500 resistance level right now, and you're seeing a little bit of momentum coming into that level as well. So if you break out of that 2,500 level, you really could see some quick price appreciation, maybe into the 26 and potentially all the way up into the 2,700 level. So, I know we have the discussion. I just want to point that out because it could be breaking out literally why we have that discussion.
Yeah, for sure. And we're literally pushing up against that resistance level on the intraday. Go back down to the intraday for a minute, Matt, because if you think about the storylines, the last 3 or 4 trading sessions, the market went limit down on Sunday when there was news that the Senate was at a gridlock and that they were not going to push forward the one version of the bill. Market found a bottom. All this optimism about this fiscal stimulus had brought the market back up to a high point. I think one of the questions traders have out there right now, Mark, is what do you do with this rally? How are you approaching it, Mark? What are you thinking about it? We're now pushing intraday resistance. We got a little 2-day green candle setup developing. What are you thinking about this rally?
Well, I mean, from much perspective, because you have your long-term holdings.
Let's start trading first.
Trading. I mean, this is the same thing. We go back to that 30-minute chart, Matt, because it's one of the things. And I'll teach a class on this coming up from how I look at like these intraday rallies. One of the things you have to understand from a moving average perspective on these rallies is that you come up and you're going up, and then you have little sell-offs. But what you have is you have rising moving averages along the way. Mm-hmm. And so when you look at the 30-minute chart, or you could, and this applies to a lot of different frames, if you want to just highlight that in, is that at different points, like along the way, early Tuesday morning, came down to the 20 and caught it. Then today caught it at the 50. And so you have on rallies, and if these were daily candlesticks, you would see the same type of thing over a several month period, is that you have price appreciation, falls back, catches moving averages, computers, day traders come in, and a trend develops on that time frame. And so that's why, like those moving averages, like when you're looking to go short, for example, when you're looking to go short, knowing that like there's lots of support levels rising on these intraday charts along the way. And as long as they hold, it usually helps pump, creates rising support levels. And then when you get that intraday breakout like that, well, as Matt said, 26, 2,700, we don't know, but you know that price appreciation can be possible. Mm-hmm. So from a day trading point of view, using whatever system you are using, you trade what you see. This is that old thing that you like to say time and time again, trade what you see, trade what you see. From a swing trading perspective, it's still maddening because once again, have my internet connection says it's unstable. So hopefully, no, there I am again. So from a swing trading perspective, we're still in the same situation that we were for the last 5 weeks. Mm-hmm. We're in an ongoing news story. You don't know the nature and cycle of the news that will come out. And so like trying to find trades that you can make for a 3-5 day basis, even, that's really, really, really difficult. Mm-hmm. That's really, really, really difficult. So from a day trading, it's the same thing you always do on day trading. It's and I know it's maddening for new day traders as they're trying to figure out this and that. Once again, practice, practice, practice. You'll learn things during this time period that you'll be able to apply the rest of your life. Now, from an investing point of view, that's a whole different conversation that we can get in later in the halftime report.
Yeah. You know, Matt, obviously a day trader might take a breakout here, might take any pullback. I mean, day traders trade what they see. They trade the price action, just like Keith has been teaching in the Tuesday night futures courses and in the mind of a traders that Mark has been holding. I don't trust this rally. Let me just be very, very clear. I do not trust it at all. It doesn't mean it can't go up. You know, the market doesn't go up or down because of any one person's perspective. The market is big. What is fueling this, Matt? Is it the hopes of the stimulus? Is it just short covering? I mean, what's your read on the situation?
No, I think there is a short-term perspective on, you know, what the Fed did on yesterday morning, kind of going all ballistic. I mean, guys, the 1 month and the 3 month bond just went to a negative for the first time in our history. So obviously bond traders are going into the riskier asset classes, very similar to what they did in 08 and 09.
Mhm.
But you know, there's always this, you know, buy the rumor, sell the news, right?
Mhm.
And, you know, the market in the last 2 days has been buying on the hope that, you know, we're going to see a historic deal coming out of Congress, and the president's going to sign this historic deal. And, you know, the Senate just passed a $2 trillion stimulus that basically, and we don't know exactly what's in the bill because it hasn't been publicly released yet. And we also don't know if Nancy Pelosi in the House is going to agree with everything that's in the bill. So there is still some of that going on right now. But I think the market's just buying on the hope right now that the government's going to come together and put out this massive $2 trillion stimulus. And on the backs of, you know, the Fed going all ballistic over the last couple of weeks and increasing $4 trillion into the market. I think the market's just having a short-term, you know, rally. And I do believe it is a short-term rally. I am not prepared to call the bottom on this in any capacity. I think we're very, very, very early in the discussion on calling this the bottom. Even Ben Bernanke said here today, Tim Bernanke put it out that, you know, it's nothing the Fed does and nothing the government does is going to fix the problem. You got to fix the healthcare problem first. You got to put public health first, and then you can see a path towards the economy improving and the market improving. And that's what we've been saying at Tackle for weeks and weeks and weeks and weeks now. So, you know, I do see this as the market just having a short-term reprieve, buying on the hope that we're going to see this massive stimulus. And as of right now, what we do know that's in the bill is we know individuals making less than $75,000 are going to receive a $1,200 check. Couples making less than $150,000 are going to receive $2,400 plus $500 per child. That's going to equate to about $500 billion total. 100 to 130 billion is going to hospitals. 350 billion is going to small businesses in loans, and 500 billion in bailouts. And that's really kind of what we know as of right now. And, you know, whether Nancy Pelosi supports that or not, we'll see that coming over the next couple of days. But the market's just buying on the hopes that the government's going to pass this $2 trillion stimulus bill. But like we said yesterday, that doesn't mean they're going to execute it properly over the next, you know, couple weeks. I mean, most people think those checks aren't even going out for perhaps, you know, later May type areas. So
yeah, you won't get those till late May, June. So
yeah,
you still got to survive for 2 months until those checks even come through
during a lockdown.
Yeah, and so hopefully you have 2 months worth of food if you're in that lockdown and you're waiting on that check, because it could be a while.
No, it certainly could. But, you know, when I'm looking at this, you know, from an individual perspective, not from an economic perspective, not from a, you know, market perspective, but I mean, my God, guys, we're putting $6 trillion in stimulus here, not $2 trillion. We got to include what the Fed is doing in terms of the stimulus as well. So you're talking upwards of $4.85 trillion going directly to help corporations, big businesses, and so on and so forth, and 500 billion going to help the individuals. And I just don't see that as from a human perspective. I just don't see that as okay.
Well, and quite frankly, I don't see it as okay either, but I'm even trying to map out the human response to this, Mark. Yeah, we've got all this money that they're flooding the markets with, but is it going to change human behavior? Mortgage applications were down 30% last week. Who's going to buy a new home right now? You know, you have companies that have laid people off. Are they going to instantly go back and rehire them because the Senate passes a $2 trillion
Commercial
bill?
real estate is shut down right now in terms of that as well.
I even read
Do
some
we
data.
know if there's any buyback restrictions in this bill?
We don't know the limitations and the regulations, and that's one of the things the
I
Democrats
really
have been
hope there
fighting
is,
for.
because if
Well,
there is
I do as
buyback
well.
restrictions and stuff at these low levels, then that would kind of force companies to actually put money towards their employees, which is where it should go. It should be
Yes.
able to allow them to keep people on so that people can go back to work so they can get their own checks coming in.
I
That's
would
the
be
way it should be done.
surprised if the
This is what
Democratic
Schumer said.
House
That
does
it will ban
not
loan from the bill.
put that in the bill, because that's one of the things the Democrats have been fighting for is the restrictions on companies that actually do take bailout money. That there's going to be restrictions on buybacks and executive bonuses and so on and so forth. And so we don't know what the final bill looks like as of right now. Obviously, the Senate passed their version, which we don't know exactly what's in that bill right now. The House is going to have their say on the bill, obviously. But there absolutely should be restrictions to executive bonuses, as well as stock buyback programs, if for any company that does take bailout money here.
Absolutely. And that's something I agree with Democrats on. And like, I'm a hard conservative and people know that openly. And I think there should be restriction on the buybacks.
Me first, then Mark. Back this out to a weekly chart real quick, and let's have a bigger picture conversation about this reopening the economy. Mark, as an investor, so the trader, yeah, if a trader wants to buy the whip.
Before you do that, Tim, let me just tell you what Schumer said. My internet is. Has anyone else been having internet problems in higher frequency than you normally do?
They're slowing down.
Well, imagine that. Well, A, they're throttling it, and B, imagine how many people are online because they're quarantined right now.
Yep. I'm sure they have bandwidth issues.
Yeah, okay. I think it's a two-pronged reason.
All right, Schumer said that the bill will ban stock buybacks for the term of the government assistance plus 1 year on any company receiving a government loan from the bill. So if you receive money, buybacks are banned for 1 year during the term of the assistance and another year on top of that. So.
Good.
So they compromised is what I'm hearing, which probably, okay. We'll have to get the details of the bill. We'll be breaking that down as we go. I'm going to extend the question I asked you earlier, though, Mark, as an investor.
That should be a permanent ban, by the way.
It will be.
As an investor, are you a buyer? Trader, yeah, breakout, got it. Day trader, all that kind of stuff. As an investor, how are you approaching this situation?
All right. So my approach, my general thesis on all of this is that at some point a floor will be put in. Now, obviously, trying to call a floor today is one of the dumbest exercises that an individual can engage in because it's nonsense. With all of the economic data and earnings and all of the things that play in, trying to call a floor at 2,200 or somewhere down there, that is a waste of mental exercise right now. But as a general thesis, I do believe that a floor eventually will be put in. It's the premise we've had on the coronavirus, what we know about it, that it's not the boogeyman, that with massive government assistance, that eventually a floor will be put in. And so, and that the government will not allow companies to go under. Now, I have they survive but thrive not thesis that just because the government will allow you to survive. For example, I was just reading that the airlines basically got everything they asked, 32 billion in grant money, just outright, here's some money, take it, to cover employee cost and overhead cost as a result of this. So they will allow companies to survive, but that doesn't mean thrive. And so as price gets cheaper, I'm more interested. After the market's rallied 15% in 36 hours, the higher it goes, the less interested I am, because the chances of a bearish retracement, the chances of negative news coming out from the coronavirus, I don't believe that the economic data that will come out, and I think I have general consensus, I'm not saying anything special here, is going to be terrible. The earnings are going to be terrible because, you look at some of those bigger companies, over half of their profits come from international sales. Even if the US kicks in, the rest of the world ain't. And so like there's so many things from a big picture, economic picture coming down the pipeline, like the higher it goes, the less interested I'm in, because it just listen, and once again, if this thing rallies and goes to 3,000 and holds, I'm going to miss out on that. I'm going to miss out on that. And I'm okay with that. I understand FOMO. I do. I'm experiencing more FOMO in the last week than I have at any point in the last 10
you
years.
are. Yes, you are.
You know, I get
well,
it.
talk about that. What is FOMO for somebody out there who
FOMO
does
is
not know
fear
what
of
that
missing
is?
out. That like, oh my goodness, the bottom was there. It's going to go out, and I'm going to miss getting these companies at discounted prices, and just going to miss out on all that. I have accepted that if you have a sharp, sustainable rally, that I am going to miss out on that, and I'm okay. I'll have plenty of things to trade for the rest of my life. I'll have plenty of opportunities. Maybe my oil position will be 20% of my portfolio instead of the 8 to 10% that I want. Maybe I'll look for other things to be more stable. I'll have plenty of things to do. Yes, well, I have missed out on that, but I have accepted, and I'm okay with that. Because when you look at the economics coming down, when you look at China still freaking shut down, people, everyone's like, hey, China's, yeah, China's, you still can't gather in the park, you know, and have a nice little picnic as a community. Like the shutdown in parts of the world are impossible, other than to say it's really bad on the results of the economy. And since so much of the stock market is driven by international sales, international revenue, and the domestic revenue is going to be pretty terrible too. And so there's so many potential shocks coming up in the next month or two that when things get cheaper, when things get lower, that's where I'm more interested. As things rise, I'm just going to miss out. I can day trade those things. I can do short-term trades to keep my attention, to take advantage of those type of upward moves. But as far as from an investing, like I'm just going to miss out if you have a V-shaped recovery.
We live in a global economy, Matt. India came out and said that Apple's, a lot of their suppliers are not going to be able to ship out their products. We're not doing business with China. Numbers are down there across the board. Exporting our goods out there across the world. It doesn't really matter 100% whatever the Senate does and the Fed does at some level. If the globe goes into a deep recession, the U.S. is going to be impacted over the long term, correct?
If we don't fix the public health care problem, none of this matters.
Yep, I'm with you. Which, by the way, you know, you've got this growing split about the perception of what that healthcare issue is. I will tell you this: it is not split in New York City right now. In some ways, New York City hospital beds are at or near capacity right now, Mark, and they're the number one hit, you know,
And
location in the whole
that
country.
apex in best case scenario isn't going to come in for at least 2 more weeks.
Yeah. Oh my, big picture analysis every day. We're going to keep breaking it down. Let's get into some other things here, and I want to talk about them. Let's talk crude oil. You know, this huge rally in stocks is not benefiting crude. We've seen all these fake headline chatter over the last few days that, oh, the U.S. and Russia are going to go into some kind of an agreement. They're going to form some new OPEC and all this. None of it has any substance, Matt. Why are there so many rumors in crude oil right now? What are they?
You know, there's a lot of rumors floating around about the U.S. and Saudi Arabia creating some type of Saudi Arabian OPEC Russia type deal, and right now that's just chatter. But there is a growing, you know, not concern, but there's a growing just voice of this Saudi Arabian and U.S. type OPEC deal, and I'm not seeing it out there. It's just being put out there through certain media and so on and so forth. I saw it on Zero Hedge literally today, but the U.S. and Saudi Arabia have not confirmed that.
Yeah, Mark, what you read on the oil?
You just need to understand that us oil traders, obsessed, we are the biggest gossipers in the entire equities.
It's true.
Asset management universe.
Absolutely true.
I heard there was gossip.
We speculate. I mean, come on. You know, last week it was oil negative pricing and this and that. Oh my goodness, we love to chatter and speculate and this and that. So, like, you know,
I've never thought about it like that, Mark, but it is so true about
true.
The oil industry is full of the biggest gossip of any market out there. You know, maybe gold bugs will have something to say about that, but you know, the oil market, people have more rumors and more gossip than any other market, no doubt.
Well, I don't know. Bitcoin, lot of rumors in Bitcoin.
No, you guys don't gossip. You just think Bitcoin's going to be at $200,000.
Oil is a $2 trillion annual industry, and obviously it's a direct reflection of global economics. We're sitting down here. We are not benefiting from any of this rally because, quite frankly, who's buying oil until you get substance out of Saudi Arabia or Russia, right?
It's just, if you want to sell a put like we talked about yesterday, and I'll continue to talk about on commodities that's one thing. but as far as outright purchase, seems way too early.
Boomerang ETFs might work out.
The ranges in the oil market is absolutely historic, though. We're talking about this market moves 10% daily right now.
Yeah. Gold is having a hesitation candlestick here. Doesn't really change the fundamentals of it. You got a really wonky volatility pattern in here, though, Matt. Just reaction, obviously. Big, sharp downward move, big, sharp upward move. Day by day, gold can be unpredictable, but 1700 is now developing a pretty clear resistance, quite frankly. A breakout there could be tradable. Agree, Matt?
And that's why I broke it down on the intraday perspective. You do see a little bit of a double top scenario at that 1700 level. Obviously, 1700 would be that significant whole number. Gold's coming down a little bit on the day. There's just a little bit of a retracement here, but no, nothing from a technical perspective changes the fundamental argument about gold. But if you're looking at a potential trade and you're saying, okay, let me take that above 1700, I could sign up for that.
Take a peek at palladium, up 28% today. Talk about a V-shaped recovery here, guys. Obviously, Powell took it on the chin last couple weeks, and here we are, one of the biggest green candles you're going to see in any commodity in quite some time. 28% on a day. Mark, what's going on here with palladium?
Yeah, nobody caught that. Literally, nobody caught that.
Nope.
That's algorithms.
I have zero idea.
I mean, how could you even trade that right now? It's a complete
my only guess is because commodities are supply demand at their nature, right?
Mm-hmm.
Is that you had palladium mines speculated that they were closed in the China automobile industry opening up and some combination.
Mm-hmm.
Listen, once again, these are the type of moves that people see and they're like, oh my gosh, I should have. And zero idea. Not going to catch all of them.
The bottom could have fell out just on a lack of bids as well. I mean, people just got out of the market. The algos dropped it down. That's where these big vacuums can be created. By the way, many companies, Matt, Amazon obviously has been in the news quite a bit. Bringing this chart up, what's on your mind with Amazon?
Oh, I was just looking at this potential breakout of 2000 earlier today and just want to keep everybody's eyes on that 2000 level. If you do break out of 2000, I know the current price is 1905, but if you do break out of 2000 here, you're up above every moving average and you're breaking out of a very, very significant whole number. And Amazon's one of those companies that, in my opinion, is not going to be hurt as much as other retailers out there.
How long do you leave packages on the front porch?
48 hours.
48 hours. Is that what you're doing?
Mm-hmm.
Yeah, I've read about 2 days, 3 days, something like that. I did read that 6 warehouses had infections of coronavirus in Amazon warehouses out there. I shop on Amazon. I put another order in today. I'm just trying to get clarity on what are you going to do with the package when you get it to your house to make sure that you're opening it safe and all that kind of stuff. By the way, Kramer's calling for Amazon at $3,000 today on CNBC. So he thinks this is a huge opportunity, Amazon, and they're all pounding the table right now, Matt, about these big buy points. The Dow obviously bringing this one back here. What are you seeing there, Matt?
Oh, just more strength in the Dow today than any other index.
Yeah, definitely. And a lot of that is Boeing rallying off of that 100 mark. They did take a huge leap forward here off of their big precipitous downtrend back up at 165. This is a definition of the rip. Some chatter out of Boeing, though, by the way. They did say publicly we would reject aid if the government wants equity in our company.
So then why do you need the aid in the first place?
That's my question. If you don't need it, Mark, you had a comment in pre-production, obviously, that there's a lot of people who are begging for a handout right now that are now stipulating what the terms are, right? And
what did I say? It's it's a fascinating time when beggars can dictate the terms of the deal. It's like somebody that was on this, we pull off a freeway and there's someone there with a handout and they say, you say, all right, here's $5. And they say, I'd like $7 and I'd like you to deliver it to me in an envelope. And I'd like you to put a little kissy seal on it, So
beggars can be choosers. Is that what you're saying?
Right now in the corporate environment, beggars can be choosers.
It definitely is happening. There's no question about it. And that's why we need to know what these terms on that deal are when it does get passed through and see what the House does. Matt, real quick on the dollar.
If Boeing's not facing immediate bankruptcy and the elimination of their company, and they can dictate the terms of their bailout that they're getting, which is to the tune of $60 billion, why are we bailing them out in the first place?
I personally do not think we should. I think any of the needed, kind of things that the government would absolutely have to have from a defense perspective, we could acquire those. I'm sure with even property rights, and whatnot, constitutionally, if it is a defense thing, we could. I say let the company
There
fail,
should
quite
be
frankly.
zero negotiation from a corporate level perspective. If
Yeah.
you accept public donations to your company, the government should dictate the terms of that agreement.
Where are my free market capitalists right now? Let the airline industries,
We're a
get
dying
through
breed,
this.
Tim.
Yeah. By the way, my
Yeah, I
internet
was gonna
is
say, they don't
unstable.
exist. They're far few in between right now.
If I cut out real quickly, just keep moving
You're
forward.
fine.
Take a peek at the dollar real quick here. Little pullback in the dollar, breakout, retracement, retest. I mean, little bull flag up here, kind of from a pattern perspective. I don't know if I'm trading currency right now, Matt. I don't know if I trust this signal because of all the money they're flooding the market with.
That's a
What's your read
large
on the
range on that flag is what that is.
What's your read on the dollar here, Matt?
Well, you're forming a bull flag here. Then obviously it may not confirm, but when you're talking about a bullish retracement, a bull flag, you're looking at a 2, 3, 4 day retracement coming back down into a support level. Obviously, the dollar has found a fairly important short-term support level as these moving averages are catching up to this historic movement we saw in the dollar over the course of the last week and a half. And you're forming that support level right there at 101 with the overhead resistance level at 103. If you look at this on that 30-minute chart, you can kind of see it a little bit more clearly. This support level at 101 is forming, and you can look at what's happening technically on the dollar, and you can apply it to other type of technical conditions, whether we're talking about bear flags, bearish retracements, bull flags, or bullish retracements. What happens is you come and you find this intraday support level right there at that 101 level. And as you can see, this trend line right here, very consistent on the downside. And that's done more based on algorithms than anything else. The trigger is one of twofold. And Noah and I have debated this many times. Noah loves to breaking out of flags out of the trend line. Correct, Noah?
I will take that signal. Yes.
Yeah, and it is that's the aggressive signal, and it's 100% tradable, no doubt about that. The second signal, if you don't want to take that aggressive trade above that trend line, is to wait for the ultimately to wait for the breakout, which is a lot more price appreciation coming into that. On something like this, just the consistency of this trend line moving down. If you do break out of that trend line, you should see the dollar appreciate here, and that's the trigger I'd be looking for now.
Mm-hmm.
I'm down with that trigger too.
Yeah, and if 101 breaks and it never confirms, no harm, no foul.
I might place my first Forex trade in years.
Well,
You like that trend, don't you, buddy?
I'm so proud of you,
I
Mark.
I do. Well, I mean, because it's the fundamental. I mean, I'm a weird quasi fundamentals with my day trading kind of guy sometimes on commodities and currencies. And I think the fundamentals on the dollar are really interesting right now. So
I think
yeah,
what it is
I like
with you,
that.
Mark, correct me if I'm wrong. You have to believe in the premise, and then you'll take the intraday signals. But you have to kind of have it mapped out from a premise perspective as to why you want to do something one way or the other, right?
I have to understand why the price action is occurring. Now, I might not even have to agree with the price action, which is why this day trading environment has been fairly simple, because there are huge relief rallies when things sell off. I don't have to agree. I can think the market will be lower 3 months from now, but I understand the price action. And so, like right now, like the rally going up, I totally understand it.
Yeah.
In the equities, you've had this huge sell-off. You have a stimulus bill. You're going to have these type of rallies in a downtrend. So it makes sense for me from a price action. I understand why it's occurring, but I do.
Yeah.
Well, and what you're seeing on a lot of these charts, look at the Australian dollar versus the US dollar, nice little bearish retracement coming into the 9 EMA. Trigger would be underneath the low there. When you look at the New Zealand dollar, NZD versus the US dollar, you're seeing something fairly similar in terms of a traditional bearish retracement here. When you're looking at the two major currencies that have been traded against the dollar recently are obviously the euro dollar. You're seeing a little bit of a bear retracement right there. When you break this down from a 30-minute chart, you're seeing a very consistent, nice little uptrend here. The same way on the dollar index, we were seeing this very consistent downtrend on intraday. So when you're looking at the euro dollar type cross pair, it probably confirmation would probably be underneath 107.80 in my opinion. You're seeing something fairly similar on the British pound versus the US dollar. Nice little short-term, intraday retracement, bearish retracement coming into there. So you're starting to see a little bit of a bearish retracement setups against the dollar on many of these currencies. So to me, it starts with the dollar index kind of reclaiming that intraday resistance breakout on the 30-minute chart. And if we do see that breakout on the 30-minute chart, you should see confirmation on both the Australian dollar, the New Zealand dollar, and the euro, in my opinion.
Yeah. Let's talk companies here, guys. Quite a few actually want to go through here. Let's start with Nike. And Nike had their earnings yesterday. They actually came out and really beat the number, quite frankly, and it jumped up quite a bit on the stock. There was concerns about obviously the coronavirus impact and all that kind of stuff. The Nike stock price had been down about 35-40% from top to bottom there, and so it is rallying back 12%. Here's some interesting numbers. Number one is that their sales in China only fell 5% in Q1. That's what they reported, and that was obviously
Q1 for Nike though is. Hold on. Q1 for Nike is December through February.
Correct.
Doesn't include March.
Yep. But here is one good thing. Direct to consumer sales did rise 13%. They said their digital sales are up in their conference call. So they are getting some people to come directly to their website and order them and have them shipped to their house and all that kind of stuff. The market liked it here. I don't think I would touch this stock for any reason on the long side. Matt, what's your reaction to the price action, just the earnings in general?
Again, the earnings were interesting because what Nike saw is they obviously saw a fairly significant reduction in, like foot traffic in their brick and mortar stores, but they saw a 30% increase in online traffic. And so that was fascinating to kind of see. And that's specifically out of China. And they're applying the same type of model they did in China to what they're doing in the US. So obviously Nike is focusing on online sales and so on and so forth. The numbers actually came in pretty good. Now, again, total numbers are from December to February, and that does not include when the U.S. really kind of started waking up to the corona situation. But if you take the numbers for what they are, they came in at 78 cents on earnings per share versus the expectation of 54. They also beat on revenue at $10.1 billion versus $9.9 billion in revenue sold. So obviously an impressive number, but I don't think that Nike's report is going to be reflective of or a leading indicator what other companies are going to report, given the fact that they will have a different reporting structure from January through March instead of December through February.
It brings up a big picture question, though. I want to throw this around the room. Is the forced lockdown and the thing that we're dealing with as a culture right now going to allow companies, and Mark, you threw this out there the other day, and I've been thinking about it for 2 days, is it business strategy is? I mean, could Nike see the profitability in online sales? They don't have to keep a warehouse open. They don't have to keep a store open. And maybe they trim back the number of commercial locations they have, Mark, or they adjust it slightly or whatever it is. I mean, this is a big company, obviously, but even small companies. How many companies right now are forcing their workers home? They're going into online sales models. They're going to try to find something that works. And what if it actually does work for them in different ways? And you might actually see a pivot or a change in the way companies do business. Anything to that theory, Mark?
I've joked for years that one day, hundreds of years from now, the whole world will be dollar stores, Walmarts, Home Depots, and that's all there's going to be. I mean, that's been the trend of retail, right? I mean, you didn't need to have these trends, So, I mean, and I think
these
even
trends
more
have been happening for 15 years.
I mean,
Could this just be gas on that fire, Matt? I mean,
yeah, I think that's maybe companies, will, move a little quicker to an online model. But I mean, we've stated for years that companies that don't adjust to an online model, they're dead companies.
Yeah, I'm with you.
I mean, why has Walmart been so popular over the course of the last 5 years? Is because in 2014 they changed their model from a brick and mortar to try to be more like Amazon, to shift sales online, to do same day shipping. Same thing with Target, same thing with Best Buy, obviously the same thing with Nike. So companies that maybe this just exasperates that and quickens that journey for a lot of these retail companies to move more to an online model. But this has been a growing trend for really 15 years now.
Absolutely. Absolutely. Let's take a look at America. AAL actually came out today and said that they're not selling middle seats. I've got news for you, AAL. People aren't buying the middle seat right
American.
It's not happening anyway. I know that your demand is way down. Obviously, airlines rally. I think it's premature until we know how that money is earmarked. Don't you think, Mark? I mean, until we see that bill get passed and whether that money is a loan or if it's forgivable and all those kind of stipulations, we're seeing snapbacks in the cruise
money
lines
for
today.
the money for the airlines is going to be totally just, here's some money. Yeah, here's some money. I mean, tune of $32 billion. And once again, I mean, airlines fall under that survive and thrive. If you're out there experiencing FOMO and you're like, I got to do something, it's like, what's your advice for the person that is FOMO? Oh my gosh, I'm missing the rally. It is, I miss it. I'm an idiot. And who is like,
you should not build your investment. You should not build your investment thesis when markets are live, when your emotions are high, period. I think the mistake a lot of traders they make, sit down when you're unemotional and build an investment plan, build a trading plan. I mean, a lot of this comes down to market, a lack of planning, a lack of strategy in the first place on how you're doing portfolio design.
Why do people fear missing the bottom? Like, that doesn't make any sense to me. If this is truly an opportunity and the market is forming a bottom, which we just simply cannot determine, given the fact that we're still in a bearish downtrend and we're still in a bearish market, and we're only talking about a 2-day rally on the hopes of a stimulus package coming out of the government. But why do people feel like they have to, nail the bottom? If this truly is a bottom, guys, if it truly is a bottom, and you're talking about $6 trillion of freshly minted money coming into the market, and the economy starts rip roaring again, you're going to talk about historic price action over the next 10 years. You don't got to pick the bottom after 2 stinking days. Patience is a virtue. Show it.
Breakout here on the intraday. Obviously day traders are taking that.
I like what both of you said so much. Do it after. Patience is a virtue. I don't know if patience is a virtue has ever been said with more fervor than what said it with.
Matt stood right up on that soapbox and he was ready to preach.
But and I got nothing.
Well, I'm sick and tired of everybody in the market over the last 2 days trying to say this is the bottom, this is the bottom, this is the bottom. I think it's ill-advised, and I think it's faulty analysis.
Well, part of that is the media, like on CNBC, Kramer calling for Amazon at 3,000. That fuels the FOMO from all the people out there watching that kind of stuff, right?
Kramer, just to remind you, Kramer was telling people to buy here as well. Okay. Yeah. We had a 4-day rally and then it got beat up by another 25%. So if you guys want to get your investment thesis from people who have an incentive to tell you to buy, then get your investment thesis from people who have an incentive to tell you to buy something.
The advice I'd give anybody out there, Mark, is build a portfolio plan that is based on, logic and thought and reviewed as a team with your coaches or mentors or whatever it might be, and do it when you're not emotional about how you want to use your capital over the long term. If you are being swept around like a paper bag in the wind, it doesn't matter whether you do or do not catch the bottom this time, or whether it is or isn't. Quite frankly, it doesn't mean anything. If you're the type of investor and trader that moves so quickly with the emotions of the market, eventually the market's going to get you. You have to be able to step back.
And you do, and that is what, I guess this is what experience teaches you. Because I started to nibble with a little bit, and I talked about this weekend. And of course, today I'm like, why didn't I nibble more? But I don't do things during the trading day on my investing that aren't thought out, planned out over.
That's smart.
I have my plan. And right now, price action is going. I'm going to buy when it gets lower, not when it gets higher, because especially on those selling of puts. So, I mean, what's happening to my VIX? I get less premium. I don't get, I have to, everything's going bad on what I want to do. But I sit on my hands because I have a plan. And when price action goes against me, I don't alter it on the fly, because that's when you are going to make the most mistakes in life. You are going to make your most trading mistakes in life during market hours when price is going, reacting to intraday moving average bounces, when you should be thinking in these 10-year blocks. Like I would, building off what you said, Tim, whatever your plan is on the weekend, that's your plan. Do not adjust it on the fly. Do not adjust it on the fly.
And it's such an important thing to understand, Matt, because investing and trading are two independent skill sets, and you need to build them both. I mean, everybody out there does. And the mindset of an investor, the ability for a trader to catch the rally or whatever it is. Yeah, if you're day trading or whatever, use your skills, build your skills, and commit to them. There's no question. Let's move on here, guys. Let's talk a few companies.
Very quickly. I understand two things. Number one, if somebody wants to push their chips to the middle of the table and start the investing process, I understand that if they understand going into that investment that they are doing so with some risk, and that risk is another 20 to 30% decline in price. So if you're willing to invest in a company that you believe in for the next 10 years, the entire 2020s, and you're willing to take on an additional 20 to 30% depreciating in price, I understand that because it's hard to find bottoms. Or number two, what I see from a technical perspective, and something I could start signing for, is if we do get this rally and this rally continues into 2,700 or even 2,800, maybe come in and test those lows at about 2,870, and then retraces back down and firmly establishes a support level that is a higher low, I can start that conversation of, is this a bottom when we see that first higher low? After a 2-day rally, that's just not the case.
Maria has a funny comment here, and I love that, Matt. Pivot, projecting the pivots. I think that's a great skill for any technician, any trader to be able to do, to try to understand, okay, it has to go here, it has to come back here. I do love Maria's comment. I'm a trader and now have an investor mindset, but in my life, oh boy, we fight. Sometimes they do fight with each other, Maria. There's no doubt about it. That little battle in your head sometimes. Let's talk some companies here. Why is Darden, not a sell the rip candidate here, Mark? I mean, take a look at DRI. The restaurant industry is going to be under pressure. They talked about closing so many different stores that they're not going to be reopened. The stock is up huge here today. Look at that bearish retracement. I know trying to fight a 20% candle, it's not today, maybe. This is one of those knee dojis, but Mark, are there still some sell the rips developing here?
Yes, there are. I mean, here's the thing. I mean, there's a lot of lessons to be learned in this environment, and they'll play out. But something like Darden, there's two things that matter. How much grant money does the restaurant industry get? How much grant money does the get in that bill? We don't know that yet. Details are emerging on the airlines. They will get tons of loan money, right? They'll get tons of loan money. We know that unless, I don't know how you argue that restaurants are going to be earnings wise better off this rest of this year, no matter how this virus plays out. I mean, I think there'll be a little bit of a social change in how people do things.
Correct, because even if we get containment in the short term to be able to flatten the curve, we're going to have many outbreaks of this thing, aren't we? I mean, isn't that what the science is telling us, Cody?
Go ahead.
Yeah, the science definitely showing that it'll be a like roller coaster down. So even when this thing starts turning over, we're gonna see. My internet's unstable too. I don't know if I'm back yet or not, but we're gonna see it basically do some bullish or bearish retracements on the number of coronavirus cases that we see, because as they start decreasing and we start opening the economy back up, I don't think anyone thinks that we just need to open this thing wide up, but as certain businesses start opening their doors back up, we're going to see upticks in coronaviruses. And then, we should be able to keep it maintained in our control. And then we might see a downtick, and then we're going to see an uptick. So it's going to be a bearish retracement down until it's finally over.
Noah, doji pivot confirmation on this bear retracement. Can I sign you up for a technical setup there?
I already attempted to take a short on this one earlier, so I'd sign up for a second attempt. No problem.
Sure.
Hey, go to an hourly chart. Everybody's internet's breaking down. Zoom must be having capacity issues.
Zoom, or it could be Comcast. Who knows?
No, it keeps telling me, yeah, internet unstable.
Okay, well, once again, I mean, we're looking at
Your
hourly
webcam
chart.
for taking up some of your bandwidth, by the way.
Turn it off.
Fine, then I'll turn my webcam off.
I'll turn my webcam off too.
I'm going to leave mine on.
We're all going dark.
I mean, but like you look from a moving average perspective, and that 920 combo on rising trends in these situations, really, really critical for me. You can expect these bounces, these bounces, these bounces, these bounces. My ideal situation on these sell the rip environments are you flatten for a couple days within a range. Those rising moving averages catch up, and then they slowly start to break. Right now, they have a ton of support. You're looking at the 30-minute. Once again, what happened? This is what happens when you have these little trends come up. All of these rising moving averages on short time frames, hours, 30 minutes, 15 minutes, 5 minutes, they're all rising. And so when you have a little bit of price sell, what happens? It bounces off of moving averages, Al goes by, trend continues. You get a point where these things consolidate a little bit tighter, loosen up, and where they're no longer serving as bounce, then you have a lot of potential downward movement. That's not happening right now because there's stimulus euphoria, there's shorts covering. You try to get into a short with these rising moving averages, you're met with computerized trading, and don't fight computerized trading. You will not win that battle very often. Wait for those moving averages, those signals for computers that are buying at support. Wait for them to flatten out, and then there could be a really good opportunity as they start to break.
You know, that's why in the step system, Matt, you teach pivot confirmation and all that kind of stuff on entry. We need to get price action to confirm, not just guess when these rallies are over. I mean, that's the mindset right here. You know, Mark's talking about it. I think that's what we're always going to be promoting. There's no question about it. There's many stocks, you know, that we could bring up, quite frankly, guys. There's so many bears that are just keep pivoting back. Walmart's down today. Comcast down today for whatever reason. Everything up today are the beaten up companies: Royal Caribbean, Boeing, Darden, American Airlines. This is a short covering rally on hope. I'm very cautious with that, quite frankly. I think I've clearly stated my opinion, but let's get final thoughts around the room here. You know, let's start with you, Noah. Noah, how are you approaching the market? What's your mindset? You know, we've got our team tackle out there. Everybody's watching, and we've had a great show here today. But what are your final thoughts? What are your thoughts on the market?
Just sticking with short term, you know, taking short term stabs at the market, trying to trade the price action, and taking advantage of the volatility as best I can, just with short-term trades, very, very short-term, you know, maybe a day, maybe two tops. And again, you know, I'm not anxious to buy the bottom, but I am having fun trading some of the volatility.
Yeah, sure. Mark, final thoughts, then Matt.
We got a lot of moving parts in this. Realize that short-term price action is just that. It is technically driven. It is algo driven. It is short sell covering driven. This is normal price behavior. And once again, could be wrong. But just be cautious. If you do something because your FOMO is on overdrive, sell a naked put way down there, you know, to get that like rush you need from the drug of FOMO. Like, just be cautious. This thing's going to play out over months. There will be opportunities to enter in when, as Matt talked about, we have really good technical situations. This story is not, the Senate is adjourning till April 24th after they vote. There's no more bullish sentiment bills coming down the pipeline for the next month. Like, this thing will play out over months. And you'll have plenty of opportunities to get in. And if you can't, and you just are going to be irresponsible, sell a put on your favorite company way down below to at least satiate that uncontrollable urge.
These are definitely fascinating times right here, Matty. Final thought, Matt, and then I'll take us out.
I still think the short-term trading, day trading, one like Noah talked about, 1 to 2, 3 day swing trades. That those are the type of trades you want to take advantage of. Gino was in the Traders Lounge this morning teaching our pro members basically how to do short-term butterflies to limit the risk exposure. If you're looking at this as a buying opportunity, be very cautious and conservative with your strategy selection, obviously. But as an investor, I'm in hibernation. I'm a bear in hibernation. Wake me when we see a higher level of support. That is the only thing I care about as an investor. Investment perspective. 2-day rallies do not even get me to even talk about calling a bottom. I think it is absolutely foolish of anybody to call this a bottom after a 2-day rally on rumors. Sell, buy the rumor, sell the news. I still think you have a leg down here.
Yeah. Plan your trade and trade your plan, guys. Keep the emotions out. Don't be emotional about your trading. You know, there's so much to be able to execute here. There's tons of opportunities in the markets day by day, week by week, and over the long term, Matt. I think that what you said earlier was spot on. Guys, there's always going to be an opportunity. You know, make sure you're executing it.
Don't last a month, Tim.
No, they do not. And hopefully we can get some relief to New York right now. You know, they're the ones in the middle of it the most right now. And my thoughts and my prayers are with the people who are living there, and hopefully they can get some containment, get some federal response, and get more ventilators up there. You know, quite frankly, that's the medical response. We got to think about that first. Quite frankly, that's still
well,
my opinion.
And honestly, Tim, when you see a guy like Ben Bernanke, and I obviously have had staunch disagreements with Ben Bernanke over the years, disagreed with everything he did back in 08 and 09, and basically blame him for creating the corporate socialism that we really truly do enjoy today. But when he came out today and said, it doesn't matter what the Fed does and it doesn't matter what the government does, if you don't fix the public health care problem, none of this matters. He was speaking truth, in my opinion. You got to fixate on fixing the underlying problem. And once that underlying problem is fixed, maybe it's 2 weeks, maybe it's 4 weeks. I don't think anybody knows. But once that underlying problem is fixed, that's at that point you have that historic buying opportunity, in my opinion.
You know, we've got a stay-at-home teacher in my house here that wants to quit her job real quick, though. I'll tell you that. One of the underlying problems developing here in my household is trying to teach those kids every day.
I get it, but I'm so sick and tired of parents complaining about having to spend time with their kids. I mean, that's just, I find it disgusting, to be honest with you.
I agree with you on that one, Matt.
Literally, like I said on Twitter last night, I don't know what everybody's complaining about. I actually enjoy hanging out with my children.
Yeah, but everybody needs a break, right? 5 minutes, go out on the tramp, get away from me for 5 minutes. I think every parent needs a break, even Noah. Noah's the most zen parent I know. His little buddy just comes in on his lap every now, right?
One thing we should really, really appreciate in times like this is how difficult real teachers, how difficult of a job they truly have.
Here to that. No question about it. All right, guys, great show today. If you're still watching our show, before you leave, give me that thumbs up, share, get the information out there. And I got a challenge for everybody. If you're Team Tackle, invite one person personally, not some just quick link. Say, hey, why don't you come join me tomorrow on the halftime show and see what these guys over at Tackle Trading are all about. Let's build this team of ours and build our community. Always a 15-day trial in the comments below. Great job today, team. We'll be back tomorrow, guys. We're out.